The first insurance policies in the United States were issued around the middle of the 20th century. Property insurance covers loss associated with a variety of damage and typically protects the homeowner against natural events like forest fires, hailstorms, and hurricanes, as well as man-made causes such as vandalism. The typical American does not have the funds or available credit to replace the home and all of the things inside if a fire destroys everything. And most mortgage companies require a minimum amount of insurance to protect their investment in your property. Protecting your assets, whether it is the dwelling and structure or the contents, is critical unless you have financial assets available that could be used to replace your home after a significant loss. Homeowners insurance plans may cover the buildings, the contents, and/or liability in case someone is killed or injured on your property. Depending on the type of home you have, its age, and where you live, you may only need one type of coverage, or you may need all three. Here are a few of the most common insurance policies homeowners can consider. Homeowner 0, HO0, Dwelling and Fire, is a limited perils policy that does not provide personal property, medical, or liability coverage. If someone is hurt on your property, they may still sue you, but the insurance company is not obligated to defend you or help you reach a settlement. Each insurance carrier has unique terms and conditions. However, most provide optional coverage for the damage specifically caused by the following events: smoke infiltration related to natural causes and/or vandalism. By the way, vandalism or malicious mischief are covered, even if arson isn't involved. Fire damage caused by lightning and accidents, such as grease fires in the kitchen. Riots or other civil disobedience activities. Severe weather events, such as hail or driving winds. Explosions, aircraft, and volcanoes. Most policies have a limited reimbursement for damage caused by vehicles, providing you are not driving the vehicle or otherwise responsible for the damage. The thing to remember is that only listed perils are covered. So, if an old tree on your property falls and damages the roof of your house, you would only be covered if you can prove one of the listed perils, such as wind or lightning, was the stimulus. Homeowners 1, HO1 Basic, provides the same basic coverage for the 10 perils listed above, plus glass breakage. This plan is not very popular, and many agents don't recommend the coverage because it is too narrow. Contents may be added when the policy is purchased, providing each item is listed or valued at the time the policy is issued. Homeowners 2, HO2 broad form policies are another example of named peril plans, only you get a little more coverage with the HO2. All 11 of the perils covered under an HO1 plus 6 more are covered under an HO2 policy. Along with protection against loss caused by fire and smoke, you have peace of mind that a heavy snowfall or ice that damages your roof or a faulty appliance in your home won't cost you a fortune to repair. Homeowners 3, HO3 Special Form, is one of the most common plans because everything is covered unless specifically excluded. HO3 coverage is the minimum plan many mortgage lenders require to issue a loan. However, only structures and dwellings are covered. Personal property coverage only applies to perils listed. Some restrictions may apply, but generally, real property is covered at full replacement value with no adjustment for depreciation. Homeowners 4, HO4 Tenant Coverage. While HO4 is not for homeowners, real estate agents should recognize the term. HO4 is similar to HO2 and HO3 in that these policies cover contents and perils typically seen in those two types of homeowner policies. Homeowners 5, HO5 Comprehensive. Some agents proclaim that HO5 is the top-of-the-line policy available in the United States. Unlike many of the other homeowners insurance packages that only cover what is specifically listed, the HO5 covers everything that isn't listed as exclusion, and you can add endorsements to expand coverage. Both contents and the dwellings are covered against damage and loss. You can buy an HO5 policy, or you can add riders to an HO3 to bring it up to the same basic coverage. Homeowners 6, HO6 Condominium Insurance. This is a hybrid policy that is similar to HO2 and HO4. Designed specifically for condo owners, this type of coverage protects owners against content loss like the renter's policy and also covers the walls, ceiling, floors, and other structural features in the home. Essentially, the policy covers personal liability and personal property under a named peril umbrella for the structure. Homeowners 7, HO7 Mobile Home Insurance is a policy specifically written to cover residences that fall into the manufactured home or mobile home classification. It is similar to the HO3 coverage with some limitations and exclusions. However, this policy type is a comprehensive plan that covers many perils. Homeowners 8, HO8, Older Homes Coverage, is one of the most common policies homeowners choose if they live in an older residence, especially if it would be a hardship to replace the property if severely damaged or destroyed. Like other named peril policies, HO8 only covers specific items listed in the policy. The plan typically pays the actual cash value minus depreciation because it would cost more to repair the dwelling and outbuildings than replace them in many instances. Water damage is never covered under an HO8 policy or most other HO types, but you can add a rider that covers different kinds of water damage, from overflowing a bathtub to damage caused by a flood. There may be coverage limits in any of the HO plans that affect the amount you can recover per claim, too. For example, theft, vehicle damage, or vandalism may be limited to $1,000 per claim. It is very important to check exclusions and limitations carefully before buying or recommending an insurance policy. Now, let's talk about flood insurance and whether you should invest in a rider or flood policy. You probably noticed that none of the previously mentioned policies mention flood and water damage, although a non-peril-based plan will provide water damage coverage unless specifically excluded. Fortunately, there is another option for homeowners who live in flood-prone areas. The Federal Emergency Management Agency, FEMA, oversees and manages the National Flood Insurance Program, NFIP. While many people assume that FEMA funds are available to almost everyone, there are some restrictions. For example, there is a narrow definition of what NFIP covers and what it will not. Loss initiated from a real flood is defined as an excess of water that covers at least 2 acres or at least 2 properties, one owned by the homeowner who wants to file a claim. The initial cause may be a river overflowing, tidal waves coming on shore due to damaged floodgates or natural barriers, or even heavy rains that produce excessive runoff. The federal government building policy is not intended to replace content insurance, and this protection must be purchased individually. A standard flood insurance policy is similar to any other peril-based policy. It only covers that specific peril and damage resulting in loss. As mentioned above, Contents and liability are not covered unless you purchase content protection separately. Also, your NFIP policy covers replacement costs but is not a guaranteed replacement cost policy. Actual cash value is calculated by deducting reasonable depreciation. For example, FEMA may deduct 10 to 15% of the value of wall-to-wall carpeting per year depending on the quality of the flooring. Whereas homeowners' policies may be value-based, flood insurance reimbursements are based on the cost to repair or replacement cost. So, for example, let's say that your home and contents are totally destroyed by a tornado and it costs you $175,000 to repair your home. If your homeowner's policy had a maximum value of $250,000, you would receive $250,000. With NFIP, you would only receive the amount it takes to repair or replace based on the actual cost value up to the policy limit. Determining how much coverage you need can be tricky, but it is worth the time investment. Since NFIP policies never pay out more than the insurance plan limit, you must carefully consider how much it will cost you to repair or replace your property based on the same formulas that FEMA uses. Like auto insurance and medical insurance, if you establish a higher deductible, you will have lower payments. But it may be hard to come up with enough money to recover from a flood situation if you set a deductible so high you cannot afford to complete the repairs. Deciding how much coverage you need depends on your dwellings or building property, your personal assets, and uninsured items. When you talk with an insurance agent about coverage, ask plenty of questions and read the fine print. You may be surprised to learn that while drywall for walls and ceilings is covered in the basement, drywall isn't covered for elevated floors. And furnaces and water heaters are covered under the building property, but refrigerators are not a covered appliance. Your insurance does usually cover the food lost in a freezer and the freezer during an electricity outage resulting from flood conditions. In order to be eligible for replacement cost value, RCV, under an NFIP plan, your residence must be a single-family home and must be occupied at least 80% of the time by the homeowner. In addition, building coverage must be 80% or more of the full replacement cost of the structure, or the maximum available under NFIP guidelines. It is important to make sure you meet all three of these requirements if you prefer RCV options. When deciding how much coverage you should buy, keep in mind that there are many items not covered under either personal property or building property. For example, window treatments, blinds, shutters, and curtains are excluded along with most personal property, like computers, kitchen utensils, plates, and other electronic equipment. You will be responsible for replacing most of these items, and you shouldn't calculate replacement value when determining how much coverage to buy. Talking with your mortgage broker or insurance agent may help you create a realistic checklist to get an accurate estimate about how much it would cost to replace your home and covered contents if a flood event occurred in your neighborhood. The reality is that most homeowners could benefit from flood insurance. The NFIP offers affordable policies for around $700 a year. And when you consider that the average residential claim for flood damage a few years ago was more than $42,000, you can see the benefit far outweighs the cost. Currently, the maximum coverage amount for flood-related losses is $250,000 for buildings and $100,000 for eligible covered content, but you can buy additional coverage from a private insurance agent. And you can purchase policies with lower limits if you live in a low-risk area. There is also an option called the Fair Access to Insurance Requirements, or FAIR program, designed for homeowners with unique challenges and risks. This state-mandated program helps high-risk homeowners gain access to affordable coverage if they live in a flood-prone area or have had multiple FEMA claims. Although many homeowners are underinsured in the United States, having insurance is a wise choice. As a real estate agent working with potential home buyers, it is your responsibility to help them understand the benefits of protecting their assets.